Hello everybody, welcome to the technical analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. As always, keep in mind that there's risk involved with each trade that you take. As always, you should have a plan for managing risk. The tools within our web trader and our app help to make that quite a bit easier. You'll see if we simulate some trade examples in the session within our order window, it helps you calculate exposure and potential profit, making it quite a bit easier to have those numbers in mind before you place a trade. And also keep in mind that what we go over is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we can access our web trader, which allows you to trade on both MT4 and MT5 accounts from one location. And our app is the same. The Ava app, you can find that in your major app stores, and you'll see that it has the same functionalities and features that we're about to look at within our web trader. And so if you log in here, this will take you to our web trader platform. Now, I know this is a technical analysis session, and we'll get to that shortly. But it makes sense to talk a little bit about the fundamentals as a general practice before jumping into doing your technical analysis, so that maybe you have an idea of which way you believe the wind might be blowing, so to speak, with different instruments, whether you feel like there's some bullish momentum or bearish momentum, depending on what's happening in the news and the headlines. Now, I think the obvious large news right now is Donald Trump winning the presidency for a second time in the U.S., being confirmed as the morning came in today. And, his policies won't be enacted until, after he's sworn into office in January. But he is the president-elect now, and markets are kind of reacting to the fact that a lot of his policies are pro-business, pro-growth for the economy, lower taxes, less regulations, etc. And so the stock market has really liked the results of that election. The other side of the coin, and I don't know if any of you attended the pre-election webinar that I did, the fundamental analysis webinar for the pre-election talk that we did last week. But we went over the pros and cons of each candidate in terms of policy and how it would affect potentially the markets and which instruments might be bullish or bearish, depending on who won. The energy sector and certain instruments that are related to fossil fuel energy, like crude oil, natural gas. Maybe these would be affected in a different way if Trump won like he did, because he's pro fossil fuel drilling and fracking, and right along with the green energy, but his views are quite a bit different than Kamala Harris's were and are to be primarily only green energy and to have a lot of regulations on the energy industry in general. So these things are having an effect now. And as suspected, with a Trump victory paired with winning control of the Senate, and it looks like the Republicans will hang on to control of the House of Representatives along with it. So then they then have the ability to pass a lot of what they want to do, to get things done policy-wise, and the markets are reacting to that, I think, with extra momentum. And we talked about that last week in the fundamental webinar that we did, that would play a role, not just who won the presidency, but also did they carry the House of Representatives and the Senate along with them. And it looks like the Republicans have pulled that off along with Donald Trump. So that's something to keep in mind as we do our technical analysis. Now, some other things to keep in mind. Just last week, the U.S. had one of the worst jobs reports in a long time. 12,000 jobs created, and those jobs were all government-created jobs. If you eliminate the taxpayer-funded jobs, the private sector actually had negative job growth. I think the The jobs with manufacturing lost something like 40,000, 45,000 jobs compared to the government gaining a bit more than that. Or maybe it was the 30,000 loss and 40,000 something gain in government jobs, which ended up with the 12,000 total. But you know, the point is they were bad numbers. The private sector lost jobs, and especially manufacturing got hit hard with a lot of layoffs, and there was just a lot of taxpayer dollars going into government hiring to even float any positive jobs numbers out of the US. So the outlook then moving forward, and we have a rate decision then, the outlook is that potentially we're going to have another rate cut in the US. And before we get into the technicals, we can take a look at the economic calendar. And we won't go into detail on this, but on the economic calendar, we can see what's upcoming. And so if we look into tomorrow, we've got a rate decision out of Great Britain, expected to have a cut in the interest rate, and then we have jobless claims out of the US expected to rise. Makes sense since the job hiring was so bad that initial jobless claims would go up. This could create fear in the market tomorrow. Fear of recession, fear of the economy really not doing well. But then that's followed up with the rate decision and the Fed press conference after that tomorrow. And so also expected to drop the rate from 5 to 4.75%. Boy, they surprised last time. A lot thought it would only be 0.25% cut like the expectation this time, and they cut it 0.5%, 50 basis points. So, you know, if that happens again, you could see a lot of reaction on the markets. So that paired with the election that just occurred in the US, expect a lot of volatility. Okay, that's the point here. Tomorrow we'll go over the specifics on that announcement and how has the market moved in the past with rate decisions, and be more specific about actual trade strategy that you could do on some of those announcements tomorrow with the initial jobless claims, the 2 rate decisions, one out of Great Britain, one out of the US. So tune in for that tomorrow, which is earlier in the day than this session this evening. All right, so what can we look at? We can look at some signals if we're interested in different instruments. The US 500 makes sense since it was the US elections and we have a rate decision tomorrow out of the US. So I can get rid of some of these old lines, support and resistance that I drew. And what we see is an uptrend, exactly what we talked about, that there's some momentum. These are 15-minute candles, and you can see it's just been climbing all day. Okay. Maybe we go to some larger candles to get a better view. And what we see is all-time high up here. So the only resistance is the all-time high, which it just hit earlier today. It looks like this might want to try and go up and challenge that all-time high. The question is, will it break that all-time high or not? We can take a look at the signals that are coming out. I do see there's a signal on the US 500. And so if for anyone who's new, this symbol means there's a signal from Trading Central, and we can look at the technical analysis breakdown. And indeed, it looks like the expectation is this will go up to a new all-time high before, I believe, potentially losing some momentum as we get towards the rate decision tomorrow. Okay, sometime between now and then, I think it may make sense that there could be a pullback. But right now, the signal is still live and active, calling for the US 500 to push up towards 6,000 here. Okay, between 6,000 and 6,060. So the momentum's on your side. If you were going to do this, you might put your stop loss below the pivot line. This is a pivot line here 58.65, which is, let's just move this line, 58.65 right there. So why is this a pivot line? Because it's an old support and resistance area from back here. You can see on the chart, it had trouble breaking above or below this price. And so as this would come down, this would be a support area here, that it might have trouble breaking below this area of support. So you might put your stop loss below that if you were buying on this. Because if it breaks below this support, then it must have found some real momentum downward. And that might be a sign that maybe you don't hang on much longer for a short-term type trade if it did come down and break below the pivot line. And that's the way this signal is defined. If it drops below the pivot line, they say then you might think about selling, because that would establish a downtrend if it breaks below the pivot line, which is a support area here. Okay, that's this line that I drew. For now, it's above it, and it's a live buy signal. So if you were going to buy on this, so then if I'm going to put my stop loss and take profit, well, they said 6,000 to 6,060 in the signal. So maybe I go halfway between, and I go 6,030, right in the middle of that take profit zone from the signal. And then my stop loss, if I want it below the pivot line, then I need to be down here about 58.50. Okay, and what I see is I'm risking a little less than what the potential profit is to go after that particular setup. All right, and you may or may not think this is opportunistic enough. It would have been nicer to start a couple hours ago and catch this pullback here. And then we'd have gotten in at 5,900 instead of 59.38. And then we'd have a much better potential profit and smaller risk. But this setup is in the direction of the fundamental news, as we talked about it. The signal is live. The technical analysis makes sense. So if you're okay with the setup, then you just adjust the trade size to be the amount of risk that makes sense to you. So if I go 0.25, for example, now I'm risking 2,200 approximately to make 2,300. So you should have in mind, how much do I want to risk on a particular move, whether that's 1% of your balance, 2%, a flat dollar amount, whatever that might be. And if I'm shooting for, say, 1% of my balance, that would be around 600. So maybe I go 0.08, 0.07, until I zero in on the amount that I want to risk. That's about 1%, a hair over. So then maybe I go ahead and make that move. Okay, so I'm going after about 1% profit for 1% risk. And like I said, technically speaking, I would have preferred to get in right as this started to bounce back up, because then I risk less to my stop loss and have a larger potential profit. But it's not always perfect with entry points, and at least the upward movement confirms that that positive momentum is still there, maybe making you more confident to make that move. Would I make this trade if the fundamental news was working against me? Probably not. Okay, the entry point was average in terms of a technical setup, because I have equal distance to stop loss and take profit. So if I don't see some fundamental advantage with this move where I think I have better than 50-50 odds, then I probably wouldn't make the trade. But because of everything we talked about with the US elections, the optimism about rate cuts coming tomorrow, paired with the election results, and expectation of tax cuts on corporations, deregulation, etc., there's a lot of optimism. So the technical setup is there, saying buy in the technical signal. Our entry point is at least neutral, and so it looks like it's currently uptrending, so it made sense to make the trade. Okay, and so this is the process that I would ask that you try when you're following technical signals like I'm showing you here, is also walk yourself through not just looking at the signal and saying, oh, well, should I buy with this signal? I don't know, and just trust it blindly. Rather than doing that, also think about the fundamentals a bit. Do the fundamentals support that this signal should go up with this buy signal? And if the answer is yes, then you start to say, okay, what about my entry point? Does the entry point look good, and does it look like it's trending in the right direction? And if everything fits your checklist, then it's a no-brainer. You take the trade, okay? And everybody's checklist might be a little different. Others might say, nah, it already climbed more than I wanted. If it pulls back, I'll get in. And that's okay too. So in that case, you'd put a pending order down lower and try and get a better entry point for your buy if that's what you wanted to do. Okay, everybody's a little different about the exact preference of their entry point and exit point. But the general idea of making sure that you think the fundamental news as it sits at the moment helps support the technical setup and move that you're about to make, that's the process I want to make sure that you understand, because I believe that that can improve your win percentage quite a bit. Okay, so what else can we look at? About crude oil. Okay, we see crude oil spiking. Makes sense. It's kind of bullish for the economy if we expect rate cuts tomorrow in more than one major country. We expect deregulation. We expect corporate tax cuts, which could power the economy forward and eventually create more demand for energy. So it makes sense right now that crude oil was bullish, and we see this big spike up. Now, if tomorrow the continuing jobless claims are worse than expected, and you know, the Feds are going to have a press conference and talk a bit after the rate decision. You know, if the rate decision comes in that they don't lower it like expected, and maybe they talk doom and gloom about the economy, you know, depending on what they say or what they do with the rate decision tomorrow, that could affect the movement of crude oil. Okay, right now it's bullish, like the US 500. So it's almost the same move as the US 500. There's probably reason for the USD to be weakening, expected rate cut tomorrow, optimism about the economic future because of Donald Trump winning in the US. So that typically would be bullish for a commodity in the energy sector. And so we see that climb. We know that tomorrow that could change with the announcements that are coming. Okay, so, and I also caution you with crude oil, there still is a war in the Middle East. Okay, there are missiles and bombings and fighting going on each and every day with Israel and Hezbollah and Hamas, and Iran is right there in the fray as well. So they've threatened Iran, that is, to attack other Middle Eastern countries that supply crude oil. If indeed they're attacked, if their oil facilities are attacked. And so you could easily, in a matter of a few hours, have crude oil respond to any increase in escalation to the war situation in the Middle East. And so as you're trading on positive momentum or negative momentum about the economy tomorrow maybe, and you think crude oil could come back down with bearish pressure, just keep in mind that you want to manage your risk. Get your stop loss, your risk management set up in a way that makes sense to you, because these are volatile times right now, and especially for crude oil with how it relates to the Middle East. Okay. So this one, we could make a move to buy on crude oil based on the technicals and how we see the fundamental news, but we just did that with not a perfect entry point with the US 500, so maybe we'll pass on this one. Okay, we could take a look actually and see what's the signal on crude oil. Is it a buy or sell? Okay, it's a buy. I expected that that's what it would be. It nearly hit the first take profit level, but didn't quite get there. It very well might get up into this take profit zone. It's basically the same trade as the US 500 that we simulated. Stop loss below the pivot line, take profit somewhere up in the take profit zone if you wanted to try and ride this up. Okay, maybe this one you'd put a pending order down low if you wanted to buy and see if you get a better entry point. Or perhaps you put a pending order below the pivot. If it breaks below the pivot, confirming a downtrend, then you sell. I don't see a lot of reason for that to happen fundamentally, so I probably would not do that option. But that's what the signal tells you to do. if it breaks below the pivot line to sell. So a pending order below the pivot in any of these signals from a technical perspective can make sense. Okay. All right, so what else can we look at? Maybe one more instrument. We could go with a currency pairing. Okay, and we see the USD strengthened some with the election and the fears that go on with that. With a likely rate cut coming tomorrow on the US dollar, this could make sense to take advantage of this support area that formed to go long on something like the Euro USD, because from a technical perspective, it's an opportunistic entry point. Typically, when something drops so rapidly, as long as the fundamentals aren't against it, a lot of times you get a rebound back up at least some of that distance. Pair the fact that the fundamentals are kind of with the USD to weaken right now, since there is an expected rate cut tomorrow in the US, which the lower the interest rate goes, typically that weakens the currency when that happens, makes it less expensive to get in terms of getting loans. And so it can increase the money supply in hand, which typically then weakens the value of any $1 in that case. So lower interest rates tend to be bearish on currencies in general. So that's in your favor if you were going to buy here. Now, again, we could look at the signal, Euro USD. Signal says buy. So it's in agreement. Up near the resistance levels, up above, is the suggested take profit. Okay, so we could do our own technical analysis here, and maybe I'll go to larger candles, 1 day maybe. Sometimes I like to drag the chart a bit. Okay, we see where this bounced from today. Classic support level. Okay, when you're looking at the 1 hour candles, the smaller candles that we were looking at, you're wondering, why did it bounce from this spot? Because you couldn't see any support right here on the smaller candles. But when we go to 1 day candle chart, then we see further back in time and we see, look at that, perfect. 1 day candle support, it hit and bounced, hit and bounced, hit and bounced. So this is a clear support level from the past. And what happened when it got near there? Boom, bounced right back up. So this is a nice spot from a technical perspective to buy. Okay, so technically speaking, I put my stop loss below this support level. I can put my take profit up here, maybe near today's high where it plunged from, okay, without having to break today's high up here. So it doesn't have to break above this resistance, just to retreat back up to it with the decreased interest rate that is expected tomorrow. Now, maybe they don't decrease it, and then the trade probably would go bad. But the expectation is they will. So take profit up here at 109, say 23, to be before that resistance. Stop loss down here below the support level on the 1 day candles, 106.60. Stop loss 106.60. Okay, this is a longer type move. It's not a short distance. We're talking, not 10, 20 pips. We're talking the number of pips movement in the hundreds. And now I just need to adjust my trade size. If I go 2 lots, what am I risking? 1,600. Okay, 0.7. I'm risking just under 1% of my balance. I like to use 1% risk as an example. That obviously that would be up to you what you want to risk per trade, but you see how easy it is to calculate. So 0.75 should get me about 1% of my balance risk, 0.72. Okay, just under 600, that's about 1% of my balance. To make more than double that, okay? 2-to-1 ratio with a nice opportunistic technical setup where I'm closer to the support level so I can get under it with my stop loss. It would have to break this support level to hit my stop loss. And if it does, then I'm happy to get out because there must have been some momentum to make that happen, and it could likely keep falling. So it's a strategic spot to have my stop loss below the support level, because it would have to confirm a strong downtrend for me to get out with limited risk at that spot, and better than 2-to-1 ratio to take profit without having to break the resistance level up here. Okay, taking profit somewhere right about here. Okay, and the good news is, not only from a purely technical standpoint does this trade make sense, and the technical signal from Trading Central is also saying to buy, but the fundamental news is on our side, which is always what I'm trying to do, is to give myself an extra advantage with the fundamental news blowing at my back for whatever direction I'm trading. Okay. We could take a quick look at New Zealand dollar USD that was requested. We have some time. NZD, if I can type. Okay, New Zealand dollar, US dollar. It's similar. Okay, US dollar was driving these movements. It strengthened, pulled the euro down, pulled other currencies down, like the New Zealand here, probably the Australian as well. We also see a bit of a support area down here. It doesn't line up as perfectly as the euro. You see the support level on this one is actually down a bit lower. Doesn't set up as perfect. You see here, this is the old support. There, again, holding at this price. And you see today, we got near that support, but not quite to that support. And it may well just go up and climb. But we're going to have to go a bit further distance maybe to our stop loss because it didn't actually reach the support level like the other one just about near did. But still, you'd have a good ratio here if I put my stop loss below this support and my take profit up near this type of resistance. Okay, this is a nice resistance level that it plunged from, but these are one-day candles. This is a large number of days away. So this would be a longer term type move to get my stop loss below this major one-day candle support level and to have my take profit somewhere up here. And you know, a longer term move like that, when it sets up so nice technically like this, that's about a 4-to-1 ratio potential profit to this resistance compared to risk to get below the support. We're just not going to the first resistance anymore. In order to get a good ratio, we're going up quite a ways to a more major resistance level. But it makes sense for a longer term type move maybe, because the US is not only expected to lower interest rate tomorrow, but maybe another time this year and into next year, more rate cuts. And Donald Trump already promised he's going to get interest rates down. So now he doesn't have control of that, the FOMC committee does. But sometimes it helps to have a president that roots them on as well with what they're already thinking. But in general, it's a situation fundamentally with the rate situation and the plans of the FOMC committee in the US to continue to lower it eventually as the economy allows, that the USD might continue to weaken against something like the New Zealand dollar as those rate cuts come in tomorrow and then later closer to the end of the year and then into next year, etc. Okay, and maybe it just goes flying up tomorrow with the rate cut and you get a quick profit. Okay. And again, the risk reward ratio makes it so you can be wrong on a move like this 2-3 times and be right once and still have a nice profit. Okay. All right, everybody. I think this is a good place to stop. I think I drove home the concept there of finding opportunistic entry points and exit points from a technical perspective, and then trying to match the directionality of that and only take those opportunities if the fundamental news is also with you in the correct direction. Okay. All right, everybody. Thank you for joining, and good luck with your trading. I'll be back with my session tomorrow at 11 a.m. UK time. Bye for now.